All right, the last presentation for this week, we're going to talk a little bit about business case fundamentals. This should be fairly brief, but what we're trying to get through here is within the introduction here, one of the things we talked about was strategy, and part of strategy is being able to make the case that doing a project is going to meet some need that the business has. And when you talk about meeting a need that the business has, you can spend a lot of money doing a lot of things. What we want to do is find approaches and projects that will accomplish the needs of the business within the right amount of resources that the business wants to execute or to get it done. And so that's basically what a business case is. You're saying it's going to cost this much to do something, but we're going to get this much value out of it, so it's the right thing to do. Let's go invest in it. That's what we're going to talk about here. So how do you actually make that business case? You do this all the time when you decide to buy things or you decide to purchase something for yourself. But in technology programs, you really got to figure out what's the value, and it's not always easy to understand what the value proposition is going to be. If you're making processes faster, you got to know how much those processes are costing the company right now, so you can know what kind of a difference it's going to make. If you're going to be able to increase revenue, you got to know, well, what markets are we actually going to be able to reach with this capability, all those kinds of things. So the business case itself, there's some fundamentals to it we want to stick to. It has to be dollars focused. So keep in mind, even though we're talking about technology projects, and you and I and everyone on the team is going to be dealing with technology, the business case itself has to be dollars focused, because the owners of the business, the people who are making those decisions, they are worried about investment and return. Is it going to move the company forward in terms of our ability to grow revenue and such? That's where it has to be. It has to be dollars focused. You can guarantee success, and you can also guarantee failure if you don't do the business case right. So make sure it's tied to results that are real, that are tied to fundamentals, that are tied to the dollars, so that you can get the credibility that you'll need to get that stakeholder support and move forward. Return on investment is a key element of a business case. So what you're saying here is that I'm going to invest money and there will be some return down the road. There are a couple of ways to present it that we talk about in this term. We got net present value, which basically looks at a period of time and says, I'm going to get this much revenue over a period of time. It's going to cost this much over a period of time. And if you have some interest applied to that, that you could get otherwise if you didn't put the money in this, what's the actual value of this today? That's what NPV kind of does. It's a pretty standard way of looking at financial return. IRR is another one. Internal rate of return basically says this will pay for itself in 3 years, or this will pay for itself in 2.5 years. That's what that basically is. Try to stay on the conservative side, because we will tend to see things through slightly rose-colored glasses. We always see the vision of what it's going to be, and we always underestimate the costs. So in an effort not to do that, stay on the conservative side and also include all your costs. Otherwise, if you don't include all the costs in the presentation, undoubtedly someone's going to come along and say, hey, you forgot about this. And once people start pointing out things that you forgot about, you start to lose credibility in the overall presentation. So make sure you get it right and that you covered the details. Typically, you only get one shot at this, especially within the term of a year. So you got to make sure you get it right. When you consider costs, think about the term total cost of ownership. This is a very common approach. A lot of big companies will bucket IT and technology expense under an expense item that they will allocate a certain amount, and that goes into overhead. What you need to be able to do is to really break that down into what's the actual cost of implementation. So not just the cost of the software and then the people doing this, but salaries, benefits, help desk calls that are going to come once this thing is in place, where are the people that support it going to sit. And if they're sitting in some office, they're going to require some heating and cooling. They're going to require office furniture. What's the system going to run on? Rack space for the server. All those kinds of things that add up to the total cost of actually implementing a system. Those are things we want to be able to take into account, a total cost of ownership. That way you can represent to the company what the true decision needs to be in terms of investment versus return for any particular project. Here I've got a sample of a net present value up on the top left. That kind of shows you I've got the costs in year 1, 2, 3, and then year 4, and you see they go down because I'm implementing in year 1 and 2, and then I'm kind of just letting it do maintenance to 3 and 4, and then my return tends to go up, right? I'm getting more value out of it. I didn't get hardly any in year 1, but I'm getting more as we go forward. All that stuff gets computed, and I have a net present value, and for this one, the net present value is $236. Great. But That's kind of how you do that computation. Payback analysis is more that chart in the bottom where you say, look, it's going to cost me this much. When does that line for costs and that revenue cross themselves so that you get that sort of payback, and you draw down to what the time period is, and it looks like it's about a 3-year payback. So that's kind of what the differences are. You need to make sure that's an acceptable business case. That's the things they're going to ask you. Is the data credible? Does it map to the current goals and objectives? So it may be a great idea, but if it doesn't map to the current goals and objectives of the business, then why not do it? Why do it? Is it on their roadmap? So have they already thought through from a strategic planning perspective, like we talked about, from a strategy perspective? Is it on the roadmap of things they want to do? Do we have the money to make the investment? So it may be a great idea, but we don't have the capital. I'm not going to move on it. Is the ROI that we talked about acceptable? And if it's profit-based, does it meet the margin threshold? So if we're going out there and saying we can do this new project, but it doesn't have a certain return over of a certain margin, then we may not move forward on it either. The recommendation needs to be made, a business case rather, needs to be made for each major recommendation that you do. It doesn't mean necessarily, even if you have a bunch of good business cases, one of the things we said was, do you have the cash to go do this? It may be that you got a lot of good recommendations out there, but the company can't do them all. So may not all be agreed to based on just funding considerations. We don't have the money to do everything, even if there are good ideas that have good returns planned to them. Also, you need to understand it needs to give a view of what's being done through the prism of their strategic plan. So whatever the strategy is, make sure it represents a step in there, a ladder somewhere in there that's part of the strategy, and give your executives an idea of why other important efforts are not addressed, and why this one needs to be one of the key ones that you're doing. You have an implementation roadmap in there, so you present sort of the scope and the timing of the effort so they get a feel for what's this going to be. Is this a 5-year thing? Is this a 1-year thing? How many people is going to involve? And then get yourself a sponsor, preferably someone not in IS. You want to have someone who's talking the business and can explain to the other business leaders in verbiage they understand why this is important. You want them to pull on the IS because they want the IS needs to be part of the business operation, not something that IS is doing just because we think it's a good idea. Readiness assessment then means you go in and you say, look, are the risks manageable? Does it have executive support? Do we have clear goals? Do we have a plan? Do we have good leadership? The things that we talked about in that first presentation this week, where we said, here's the things that makes a project successful, we want to make sure they're covered here in the business case. So those are the things that you got to make sure. If you've got these things in there, then you've got a strong case. And that's what we have for business case.